The year is 2024. The global entertainment landscape is barely recognizable from its pre-pandemic form. AMC Entertainment Holdings, Inc., once a titan of the movie theater industry, finds itself navigating a world reshaped by streaming services, shifting consumer habits, and lingering economic uncertainty. Is this a tale of a fallen giant struggling to regain its footing? Or are we witnessing the early chapters of a remarkable comeback story? AMC's journey is inextricably linked to the fate of the movie theater experience itself. The COVID-19 pandemic dealt a devastating blow to the industry, forcing closures and accelerating the shift towards at-home entertainment. As we emerge from the shadow of the pandemic, questions linger about the long-term viability of traditional cinema. Can the allure of the big screen, with its shared experience and immersive sound, compete with the convenience and affordability of streaming? The answer, like most things in the world of finance, is complex. AMC's future hinges on a delicate dance between its own strategic decisions and the evolving dynamics of the entertainment industry at large. The company must strike a balance between adapting to new realities and leveraging its core strengths. This essay will delve into the factors at play, exploring the potential catalysts for growth, the looming risks, and the forces shaping the future of AMC in 2024 and beyond. From the ashes of disruption often rise opportunities for innovation and reinvention. AMC, armed with a storied legacy and a passionate community of supporters, has a chance to write a new chapter in its history. The path forward will undoubtedly be fraught with challenges, but the potential rewards for those who navigate it successfully are significant. The stage is set for a captivating drama to unfold, and the world is watching to see if AMC can deliver a blockbuster performance. AMC's financial performance in recent years has been a roller coaster ride, mirroring the turbulence experienced by the broader entertainment industry. The company's balance sheet reveals a mixed bag of strengths and weaknesses that will be crucial in determining its ability to navigate the challenges and capitalize on the opportunities that lie ahead. On the positive side, AMC boasts a vast global footprint of theaters, a strong brand presence, and a loyal customer base. These assets provide a solid foundation from which to rebuild and innovate. The company has also taken steps to shore up its financial position, such as raising capital through equity offerings and debt refinancing, providing a much-needed liquidity buffer. However, these measures have come at a cost, increasing AMC's debt load and diluting existing shareholder value. AMC's ability to generate consistent profitability remains a key concern. The company's revenues remain below pre-pandemic levels, and while there are encouraging signs of recovery in box office numbers, the pace of growth remains uncertain. Furthermore, AMC operates in a highly competitive landscape, facing pressure from both traditional rivals and streaming giants vying for consumer attention and spending. Navigating this complex environment will require a delicate balancing act. AMC must continue to invest in enhancing the theatrical experience, attracting moviegoers back to its cinemas. This includes upgrading facilities, offering premium formats like IMAX and Dolby Cinema, and exploring innovative pricing strategies to attract a wider audience. At the same time, the company must carefully manage its cost structure, striking a balance between investing for growth and maintaining financial discipline. The global box office is showing signs of life, offering a glimmer of hope for AMC and the broader cinema industry. After a prolonged period of depressed ticket sales, blockbuster releases are once again drawing crowds back to theaters. The success of films like Avatar: The Way of Water and Top Gun: Maverick demonstrates the enduring appeal of the big screen experience, particularly for event films that benefit from a communal viewing environment. However, it would be premature to declare a full-fledged box office revival. The road to recovery is likely to be uneven, with potential bumps along the way. The theatrical release landscape remains crowded, with studios experimenting with different release windows and streaming strategies. The rise of streaming services has undoubtedly impacted consumer behavior, and it remains to be seen whether the current box office momentum can be sustained in the long run. Several factors will be crucial in determining the trajectory of the box office recovery. The quality and diversity of film slates will be paramount, as audiences are eager for compelling content that justifies venturing out to theaters. The industry must also contend with evolving consumer preferences, particularly among younger generations who have grown accustomed to the convenience and accessibility of streaming. Attracting this demographic back to theaters will require innovation, both in terms of the movie-going experience itself and the types of content being offered. AMC's success hinges on its ability to capitalize on the resurgent box office while adapting to the shifting sands of the entertainment landscape. The company must leverage its extensive theater network, premium offerings, and customer loyalty to its advantage. By offering a compelling and differentiated movie-going experience, AMC can position itself as a destination of choice for movie lovers of all ages. Section 4. Streaming wars and their impact. The rise of streaming services like Netflix, Disney+, and HBO Max has fundamentally altered the media landscape, presenting both challenges and opportunities for traditional players like AMC. The so-called streaming wars have intensified competition for consumer attention and spending, forcing companies to rethink their strategies and adapt to the new realities of a fragmented entertainment ecosystem. For AMC, the proliferation of streaming services poses a direct threat to its core business model. The convenience and affordability of streaming have led to a decline in traditional television viewership and, by extension, a decrease in the perceived value of theatrical exclusivity. Studios are increasingly experimenting with shorter theatrical windows, releasing films on streaming platforms just weeks after their cinematic debuts. This trend threatens to erode the exclusivity that has traditionally been a key driver of box office success. However, the relationship between streaming and theatrical exhibition is not entirely adversarial. Streaming services can also serve as a powerful marketing tool, generating buzz and anticipation for films before their theatrical release. The success of Netflix's Red Notice and The Gray Man, both of which received limited theatrical runs before premiering on the streaming platform, demonstrates the potential for synergy between the two models. AMC must find ways to coexist and even collaborate with streaming giants. The company has already taken steps in this direction, partnering with studios to offer premium screenings and events for streaming subscribers. By embracing innovation and exploring new business models, AMC can position itself as a valuable partner in the evolving entertainment landscape. Section 5. Shareholder sentiments, diamond hands, or jittery nerves. AMC's journey in recent years has been nothing short of extraordinary, capturing the attention of both seasoned investors and a new generation of retail traders. The company's stock price has experienced unprecedented volatility, fueled by a confluence of factors including short squeezes, social media frenzy, and the broader market's roller coaster ride. This roller coaster has left many investors wondering whether to hold on tight, diamond hands, or cut their losses. The meme stock phenomenon, which propelled AMC's stock price to astronomical highs in 2021, highlights the growing influence of retail investors and the power of social media in shaping market sentiment. While this newfound interest in AMC has provided the company with a much-needed lifeline, it has also injected a significant degree of uncertainty and volatility into its stock price. The challenge for AMC is to harness this enthusiasm while also focusing on fundamentals and delivering long-term value to all shareholders. Understanding shareholder sentiment is crucial for AMC's management team as they navigate the company's turnaround. Engaging with both institutional and retail investors, addressing their concerns, and communicating the company's vision transparently will be paramount in building trust and confidence. AMC must strike a delicate balance between capitalizing on the current market enthusiasm and making decisions that are in the best long-term interests of the company and its diverse shareholder base. The wild ride of AMC's stock price underscores the unpredictable nature of financial markets, particularly in the age of social media and meme stock mania. While short-term fluctuations are inevitable, AMC's long-term success will ultimately be determined by its ability to execute its business strategy, adapt to the evolving entertainment landscape, and deliver sustainable profitability. Only then can the company hope to transform the fleeting enthusiasm of today's meme stock frenzy into lasting shareholder value.